Most traders will see a breakout above an old high or below an old low, and they'll chase into continuation trades. But what they don't see is that on a higher time frame, price is actually manipulating its previous candle, forming a manipulation candle, which the sole purpose of that candle is to target the opposing end of the range that it's manipulating. So what ends up happening, they just get stopped out of their trades immediately, and these trades are very low probability. So I want to show you exactly how to spot manipulation candles on higher time frames, how to trade them, starting with this example on Bitcoin USD. And this played out for a 3.6R. It was a perfect 2-week CRT trade. So we're on the 12-hour time frame, and we want to take ideas from the weekly, 2-weekly, and monthly time frames for our swing trades. So the first thing I want to do is overlay a 2-week time frame here. And what we see is actually there are 2 manipulation candles in this range of price action. Because what price does is first form accumulation candles. So these candles are almost price ranges whereby there's limited understanding of what the candle is going to do or what price is going to do next. What we then see is that these ranges get swept. So manipulation above the high. You see in this 2-week candles range, we see price push up and then close inside of this candle range. Then what happens is price tends to then gravitate to the lows of the candle that have been manipulated. So we see accumulation, manipulation, and then distribution. But what makes a good manipulation candle? Let's dive into it in the second example. So we get another range of price action from the high to the low. This time it's a bearish close. So price has broken and closed below its previous candle. So we're expecting at the start of this candle for price to head lower. But what it does is straight away it targets the low of its previous candle, and then structure shifts bullish. So this becomes a potential manipulation candle whereby we're going to target the opposing end of the accumulation candle's range. So let's see what actually happens when we analyze price action. So we have bearish price action coming down to close this 2-week candles range. So this is exactly where price closes. We close this range of price action. Then we see price immediately liquidate this low, which happens to be the low of this entire 2-week candle. We then get a bullish structure shift. So at this point, we can say we had a swing point, if I just take this away, right here, that we traded and closed through. So this becomes a true market structure shift. What we then get is price action shifting bullish. So there's a slight bit of consolidation, but you see price retraces into the order block here, looks to go higher. We see another retracement, and then eventually we see order blocks starting to take hold. So price is shifting bullish. Once we've manipulated this low, the clear draw on liquidity are the highs of this candle range. So we can now place a trade using internal range liquidity. So if this is a price leg higher, we can buy from the order block, which is the last sell before the buy. We can cover either this low or the low of this entire range and then target the high. And that plays out for a 3.61R trade. So this is how to use manipulation candles to get into high probability trades. What I want to show you is something extra, something that defines a good versus a bad manipulation candle. And then we're going to look at another example. So what we see is when price sweeps below this low and starts to show us some bullish price action, we can actually just drop down a time frame to get additional context and confluence for our trade. So what we also see is that this is a previous weekly candle, and we've also liquidated its range. So when we close at this point here, we have manipulated and closed inside this bearish candle's range. So this is not only a 2-week candle low, but a weekly candle low. So the first target for price is here. And this is a very confident target because we have a true liquidation. If we look at the 2-week candle in isolation, you see that at this point, it's not actually closed inside this range. It's still a candle that is active. But by looking at the 1-week candle, we can clearly see that we have a candle closure inside of a previous candle's range. So we can take this trade very confident in the fact that price is going to go higher. First target becomes the weekly target, which is a 1.29R, but we have strong reason to believe that this is going to trade to the 2-week high. So this becomes a 3.6, 3.7R trade. So that's how to spot high probability manipulation candles. So let's touch on some theory, and then I want to walk through some more detailed examples. Manipulation candles are higher time frame candles. So from swing trading, we're looking at monthly, 2-weekly, weekly candles. These are candles that sweep beyond a previous candle's range high or low. The purpose of this is to collect the stop losses and trigger pending orders. So for institutions to fill large positions in the market, what we then see from a manipulation candle is once it's raided this liquidity at this high, it closes inside this range. Once we get a close, we then tend to see distribution to the low. Most traders are seeing this breakout and they're trying to go long. What they don't realize is we're manipulating a higher time frame candle and they're about to get dumped on. It matters because we can set our targets and get our trading context from this exact price action. So let's look at another example on Euro GBP. So what we see here is that price is trading into an old 2-week high. So this candle is closed bullish. We then see price moving up, raiding the external range liquidity at this high. And then if we track price action, we see price tries to go higher, comes into the internal range liquidity, closes inside the candle range, shifts bearish. So we now have a bearish price action, or we have a bearish price leg that we can use to target the low. So you see, we have order block here. So this is the last buy to sell candle. And we also have, it's quite subtle, but I can zoom in, an imbalance in price, a fair value gap between candle 1 and candle 3. So we have, I'll take this away so it's very clear. We have order block forming, aggressive price action through, an imbalance between the wicks of candle 1 and candle 3. I can just pull that across, and that's our fair value gap. And then essentially we can take a trade from that fair value gap. We can cover the high of the price leg, the swing point, and then a natural target for price is the swing low right there. And that turns into a 3.98R trade. Now again, can we make this a higher confluence trade? If we come down a time frame and we look at the 1-week time frame, we can see when we swept this high, we also swept this candle range. So the first target for price is naturally right here. And I'll mark that in black, and we can see that would have been to the weekly target, a 2R trade. But because we get the 2-week close, right, at this point, we can then hold to our second target. Now, the final thing I want to mention is what to avoid when you're trading manipulation candles. What you then see is, I'll take that away for now, a break below this 2-week candle range. So at this point here, I don't think we have actually hit our target, but you see that we sweep this 2 weeks candle range and we do shift bullish. So what makes this a different manipulation candle to say this that does the exact same thing? Why didn't this play out and take out the high of this candle here? Well, if you then go up a time frame, I'll take this away and look at the monthly candle. What we see is that in this price action, we also swept the monthly candle range high. And here, right here, we closed inside of this monthly candle range. So the actual draw on price from a higher time frame is right here. That is the draw on liquidity. So even though on the 2-week time frame we have a potential manipulation candle, price is still seeking lower prices. So if we come back to our trade, we can start to scale towards these higher time frame targets. Target 1, target 2 at the 2-week low, and then eventually target 3 at the monthly low. It gets quite complex, but the idea is understanding when manipulation candles form, firstly trading them in line with lower time frame price action, in this case the 12-hour, and then using a higher time frames and intermediate time frames, the weekly and monthly time frame, to ensure that we have confluence in our trades. So let's look at a quick view of how to apply this. Identify higher time frame candle ranges, when they might be manipulated. Wait for manipulation candles to close inside ranges, or use a slightly lower time frame to confirm an existing lower time frame close. So maybe the weekly if you're looking at 2 weekly. Align price action with higher time frame context, and then execute on your price action time frame. So in this case, the 12-hour time frame. My model is that I track and analyze 32 forex pairs, including gold, silver, and Bitcoin. I just wait for price action to align with monthly, 2 weekly, or weekly candles, and I execute. Once you get good at this, you can do it in 10 to 15 minutes a day. If you like swing content like this, please subscribe, and I'll see you on the next one.